Hey folks, CA Rachana Ranade here and I welcome you all to this video which is about the Israel war and its impact on our Indian stock market. If you're not really sure about what is the history of this, what is the geopolitics around this, then I would highly recommend you all to watch this video which Abhi and you have made, and I think they have made an excellent effort to make this video and help a layman understand about the history and the geopolitical scenario. Now what we are going to focus on today is not only about the impact of this war on our stock market, we're also going to try and understand the impact on gold prices. We'll try and understand the impact on the bond yields. So there are so many things to be discussed. So keep on watching the video till the end. Now let's try and understand one key point for both the Israeli economy and the Iranian economy. Now you might be like, why are we even discussing about Iran? Again, let me reiterate, I'm not a geopolitical expert, but whatever news I've been consuming, I found out that Iran is indirectly supporting this war. And that is the reason why we need to understand what could be the impact of this war on our stock market because of Iran's involvement, right? So first, let's get started with the Israeli economy. Israel basically exports for 40% of their GDP. Now we have to understand what do they really export. Their exports majorly include cut and uncut diamonds, pearls and other precious metals and stones, and almost 33% of the total exports is accounted for by these items, like I mentioned, cut uncut diamonds and pearls and other precious stones. Now we have to understand to whom are they exporting. So major are United States, which accounts for 28% of the total exports, and Hong Kong, which accounts for 8% of the total exports. Now here India is not really involved, and that is the reason why I don't see any reason why this will impact our stock market or our fixed income market or the bullion market for that matter, right? So first point is clear, I hope. Now second point is really important, which is about the Iranian economy. Oil and natural gas are Iran's most important exports, and they account for 82% of the country's export revenue. So I hope you're understanding that crude oil is a major, so oil, crude oil and natural gas are one of the most important commodities for Iran. In fact, Iran holds 10% of global crude oil reserves, and it is the 7th largest crude oil producer globally. Now, how would this impact? See, it's very obvious. If Iran directly or indirectly gets involved in the war, then definitely the supplies for crude oil can get impacted. This will lead to supply side inflation, and if that be so, the crude oil prices can rise. Now, if you have been following my channel very religiously, then you would know that because crude oil is one of the important imports for India, and if the crude oil prices rise, it is not going to be a good sign for our economy. So I hope you have understood the connection of Iran's economy and our overall import bill. Now let's understand about the impact on two important points. Number one is precious metals and the second one is fixed income. Now if I'm talking about precious metals, especially gold, and if you've been following the gold prices since last few days, the prices of gold have been rapidly following, but now you may see that yes, gold prices may start to bottom out. Now what could be the reason for this? Typically whenever war-like situations occur, all the economies try to park their money in comparatively safer assets, and gold is a classic example of a safe asset. This could lead to an increase in demand for gold, and that is the reason why there are great chances that gold could bottom out from here and may see a little bit up move. Now next point comes about what would be the impact on fixed income category, basically the bond yields. Now this is really interesting to note. What would happen in the short term as well as what would happen in the long term. As far as short term is concerned, what would happen, as I mentioned, because of inflationary trends that can kick in. Because of inflation, typically bond yields rise, and if bond yields rise, it is not at all good for the Indian stock market or for any stock market for that matter, because then investors try to pull out the money from stock market and park the money in comparatively safer asset classes like bonds. So in the short term, there is a possibility that bond yields may spike up. But what about medium term to long term? Unfortunately, if the war situation continues, then what happens to the major manufacturers? Let's try and visualize. Now, if I were a manufacturer and if the war situation continues, then I would want to safeguard my money. I would want to lower down my production, would want to cut or delay or postpone the expansionary plans. So what would happen? My company may not flourish. Similar logic will apply to all other manufacturers, to all other companies, and because of which now what would happen is that overall production will be cut, overall demand will also be lowered, and this may lead the economies into a recessionary trend. Now, if countries start going into a recessionary trend, then what do the governments have to do to take the economy out of the recessionary trend? They have to lower down the overall interest rates. If interest rates are lowered, then ideally the bond yields also start cooling off, and that is the reason why I'll sum up the whole discussion. In the short term, yes, there are chances that bond yields may spike, but in the medium term to long term, ideally the bond yields should cool off. And now finally, let us go a little bit sector specific. So first we're going to talk about the impact on chemical sector. Second, let's talk about the impact on oil and natural gas sector. And the third one would be the impact on the defense sector. So as far as the chemical sector is concerned, if you have seen the market today, then majority of the chemical related stocks were down by almost 1%. Reason is very simple. For all chemical stocks, for majority of them, I can say the major raw material is crude oil and natural gas also. Now, if again because of the war there is a shortage in the supply of crude and natural gas, then obviously for them it is going to be like raw materials will become more expensive, and that is the reason why it can impact their EBITDA margins and ultimately their profit margins. So it may have a negative impact on the overall chemical sector. Second one, if you have tracked the oil and natural gas sector today, almost a lot of stocks in this space were up by almost 3 to 4%. Obviously logic and reason is the same. And the third one is defense stocks. It would be interesting to watch how this space turns up. I would be keeping a constant watch on this space. Till now, I have not made up my mind because the analysis and the research is still going on about this sector. So if you want to know about the impact of this, do let me know in the comment section, and I'll definitely make an effort to make a separate video on that as well. So all in all, to conclude this whole discussion, if I were to talk about the short term, yes, there may be a negative impact on the overall market is what I feel. If the war especially continues, then yes, we may see 19,000 levels coming in. But if things start to get resolved, then in the medium term to long term, I'm sure everyone knows my view. I am always bullish on the stock market. I hope you enjoyed this one. If you did, don't forget to share this video with your friends. Till then, take care. Jai Hind and bye-bye.